There are decades where nothing happens, and then there are weeks when decades happen. I generally don't make a habit of quoting Lennon. It's probably a good thing that David Seymour has made his way to the airport right now, or he'd be spluttering into his coffee this morning. But I, for one, have reflected on that quote quite a few times this year. We're in a moment of massive change, increasing financial complexity, but it's a time when I think most people in the room would agree well-considered, thoughtful, strategic changes to financial regulation can shape a better future for all New Zealanders. So, our Transforming for Tomorrow panel and our panellists are promising me they are going to make a regulation chat sexy. The Chief Executive of the FMA, Samantha Barrass, the Chief Executive of Milford Asset Management, Blair Turnbull, the Secretary for Regulation and Chief Executive for the Ministry of Regulation, Gráinne, and the Chief Executive for Chubb Life New Zealand, Paula are our panellists this morning. Please welcome our Transforming for Tomorrow panel. I'm going to start with a broad philosophical question for each of you, and this does not relate to Lennon, I promise. Paula, we can start with you perhaps. What is the purpose of regulation?
What a great question. Look, I think the purpose of regulation is to provide a social license for institutions to do the right things by everybody in the market. It's not just about consumers, but it's actually about an underlying financial stability, which of course is good for everybody that participates in the market.
The social license component is very interesting. I'm going to pick you up on that in a couple of minutes. Samantha, same question to you. What is the purpose of regulation?
Purpose of regulation, so agree absolutely with what's been said. It's about, for me, it's around making sure that New Zealanders can have confidence to participate in the economy and in society. A particular purpose of regulation is to really understand where the forces of competition, where the forces of the pursuit of profit will not deliver a societal good, and to make sure that that regulation is well judged to correct that. Ultimately, it's around providing trust and confidence.
Gráinne.
I actually don't have much to add on to those two things. I think trust, confidence, and people's ability to take part in their everyday life, knowing what risks there are and making those choices.
Over there did very well, so I'm not sure I could add a hell of a lot either. But I think at the end of the day, it supports and provides guidelines to get an outcome, and whether that outcome is help protect our loved ones, our assets, or save for a better retirement. So I think it really comes down to, and I'm sure we'll talk about it much more, but good regulation really drives good outcomes.
So we've sort of largely gravitated to the social side of things and to the trust, to the social license side of things. But what about the innovation side? How can good regulation enable innovation rather than stifling it?
In terms of some good examples, maybe, of regulation that has supported innovation, and I think it was always helpful to look up and out at sort of times like now. So if we look at maybe the UK or Asia, they have adopted some really innovative ways around sandboxes. If you look at something like robo-advice, there's some really good examples in the UK where robo-advice wasn't really particularly well known sort of 5-10 years ago, where we enabled that through a sandbox type mentality where you could learn, and it sort of evolved that thinking, evolved that technology before we came along with a heavy hand of regulations without a lot of evidence to support it. So robo-advice is a really, really nice one. There's really good examples of that out there.
Is there a responsibility for those people who are designing regulation, Gráinne, to think about the innovation side, to try and balance the social license side of things with actually an environment in which innovation is stimulated?
Well, I think, first of all, actually consumers want innovation. So actually innovation is part of the social license. And if people don't actually embrace a way of exploring innovation, then they will get kind of punished by the market. I think I mean, obviously the sandbox, and Samantha referred to it in her speech that the FMA is doing. I mean, there's probably not enough use of sandboxes in New Zealand, but the thing about sandboxes is they're incredibly intensive. So, innovation does require a level of intensity and focus that I think sometimes people underestimate. So, that's something for, people in the market to be thinking about. If you want the innovation, do you have the resource and the capability to actually really focus to maximize the opportunity for the innovation?
Samantha, can you talk to us a little bit more about the sandbox experience for the FMA?
Yeah. So we've been operating this year with a sandbox, and we've had some great innovating firms within that. Picking up Gráinne's point, it is incredibly resource intensive, and one of the things that as we come to review the sandbox with a focus on where can we best put our resources and our support into fostering as much innovation as possible in the financial services sector, we are needing to think around actually how much resource has the sandbox taken, and are there learnings from that we can spread more widely to firms who are innovating. You will remember that we had an initial over 20 applicants to go in the sandbox. We could only take a fraction of that because of the resource that's involved. And it is important that we look to ways in which we can expand the support that we can provide for innovation.
And what might that expansion look like, do you think?
I think what we'll do is, I mean, we need to review it, but what we are likely to do is to reflect on the fact that part of our experience has been building up those who are innovating, building up their understanding of financial services markets, the way regulation works in financial services markets, what's expected to go through, and what we will be in order to go through that process. And I think one of the things that we will look to do is to see what can we capture in a toolbox. I mean, we've had a sandbox, let's have a toolbox. What can we put in a toolbox that's more accessible, that provides the routes through?
Right. So it's resource intensive. That being said, do you think there is space for the sandbox approach to be applied to other areas?
Oh, yeah, look, we're very open. So it could, for me, it's going to be as much as not picking one or the other. It's going to be what are the variety of ways in which we can support innovation, maximizing both where there is some intense involvement that's needed by us, as well as where can we take the learnings and put them into other vehicles that we will use.
Okay. Paula.
I think the sandbox is a tool, but we've just heard about the challenges in its scalability. And I think when we think about innovation, its truest sense, and what David Seymour just shared with us, which is we're all still sitting, or many of us are still sitting with a 20th century operating environment, which isn't actually yet fully fit for purpose for a 21st century trading environment. I think to actually generate real innovation, which I think New Zealand does need, we have got some really serious issues that we're facing into. We are becoming an old age society. We've got very rapidly changing demographics in terms of just the makeup of our population. We have decreasing fertility rates. We've got a whole raft of things going on. So in order to drive real innovation, I'd love to see, how about, organizations not sort of determining their own innovation in isolation in their own boardroom with their board and their teams, but actually rather a much more open and collaborative approach between regulation and institutions actually determining those long-term strategies and then providing a pathway to enable regulation to support that innovation. Whereas at the moment, it still feels like we're doing those in two separate rooms with a locked door between us.
It's really interesting. So sketch out an image of what that might look like, an alternative might look like for us.
I mean, it could be as simple as just opening the door. We've just had some really interesting conversations in our own organisation over the past week about really long-term strategic direction, and we've had, the internal and our governance brains trust on that. But when we look to our regulators, they are also a brains trust in their own environment, and they're often looking right up and out across the markets and have great networks across the regulatory system globally. And actually, it could be just as simple as opening that door and having that initial thinking process together.
Is that feasible, Gráinne?
Look, I think, you started with a very heavy quote. I thought I might, add with a quote in terms of what we're seeing at the Ministry for Regulation. So the really big philosophers, Fun Boy 3 and Bananarama, it ain't what you do, it's the way that you do it. And I think what we're seeing in kind of across regulatory systems is, yes, there is the regulation and you want innovation in the regulation, but you actually want innovation, capability and competence in the way that the regulator is behaving and also the way the regulated partner is interacting. And I think that's probably an area where we could actually, as you say, you open the door. It is about that relationship. Samantha said, ring us when you have a problem, as soon as you have a problem, not later down the path. So I think, it is the way that you do things. And actually, it's not all about the regulator. And I know many of you write to me and complain about the regulator and keep coming. That's fine, because some of them aren't very good, but some of them are actually very good. But actually, the regulated party also needs to come and actually be in a relationship with those. And I think we could really push the innovation there in terms of maximizing what opportunity there is within the current regulation to be innovative. So that's my, I'm happy to sing Fun Boy 3 later on for a free coffee, okay?
I'm being cheeky and putting you on the spot here. Are there regulators from your perspective who do set a good example in helping to participate to a more innovative environment?
Yeah, look, I think there are, and I think what we do see, and I've been very, very happy since we started the Ministry of Regulation, the level of engagement there has been from regulators and their boards, because I think boards, and for any of you that are on the boards, I mean, the boards are where the kind of strategic conversation happens, and if it's not happening at board level, and if the board aren't clear, what is their risk appetite, what are their priorities, how are they going to build the capability of their organisation? The other piece is they need to actually make sure that they're system players. So, for example, I went to see a board the other week that I would say is not a good regulator because they keep focusing on the individual and not realizing that actually they're influencing a system, and they need to think about the settings in which those individuals operate, not actually kind of that one-to-one relationship, but at least they engaged in a conversation. So, I think it's like everything in New Zealand. It's quite a thin market. So, you do really need to look to build your capability and capacity. And there will be great regulators, and there are some that are on a journey.
I don't suppose you want to name any names?
Oh, absolutely. No naming and shaming going on today.
But if I could just add one thing, I always like to think of good regulators as a little bit like sport. We love sport in this room, I know, and whether it's netball or rugby, but it's a bit like a referee. A good regulator, you don't blow your whistle all day long. Actually, the best games are when you don't have to, because the rules are very, very transparent. They're very simple. They're clear. If you have to drag along the accountant, the lawyer, and the actuary to understand the statements, well, then we've got it wrong. So in a ways, the best regulators are the ones you least often hear, because the rules of engagement and the guidelines are very, very clear.
And do you see a role for regulators as well in helping to foster a more innovative environment?
Absolutely, because when things go wrong, you've got to ask yourself why. Was it because the rules of engagement weren't clear enough from the regulator? You need rules in the game or it just goes to chaos very, very quickly. So we all understand that as business folk in the room. So absolutely, that's really, really important to play that. But I'm sure we'll get into it. The key thing is don't change the rules every game. And, have some consistency and real clarity and transparency around the rules so that we understand it, that ultimately drive to a better outcome, whether that be retirement savings or protection or whatever the outcome is we're driving for as a regulator, because we are in this together. No rules is chaos. We need rules and guidance, but they need to sort of match the maturity of the playing field and the participants, and be very, very clear on the outcome.
Gráinne, if you've got kind of disparate approaches from different regulators at the moment, do you see it as being your role or the role of the ministry in trying to lift the role of those perhaps underperforming regulators on the innovation front?
Look, I think that we're one of the players that can do that. And actually, you won't realize this, Jack, but you've just kind of given me a little PR opportunity. So I will just take it, saying there's so many people in the room. But tomorrow we're launching a thing called Reg Room, which is actually a suite of tools for regulators in terms of building their capability and capacity. And it's already been internationally recognised by some of the regulators in the UK as being world leading. So I mean, it's simple, it's straightforward, it's practical. It's not world, they say it's world leading. I think it's actually just good practice. But I think that capability piece is an area that we do see that we have a role to play, and we can play it in a way by actually being a bit of a referee, because actually we don't have a vested interest in any particular regulatory system, and we get to see across many regulatory systems.
I'm going to come back to you here, Paula. Trust in institutions is decaying. And as a journalist, I can tell you it's pretty evident. When I started in journalism about 20 years ago, and we thought we were the shit, right? We had these sign-written cars that were so obnoxious. I remember someone at my work seriously suggesting that news crews should be allowed sirens so that the traffic would part before them, right? And then after a couple of years, we moved to a stage where instead of having sign-written cars, we had stickers that could cover the signs on the side of the cars, right? So that when it suited, you could show that you're a news crew, and then when it didn't suit, you could put the sticker up and show that you weren't a news crew. And now, no sign-written cars, no sign-written cars. And I'm sure that decay in trust has been experienced across a whole raft of institutions. So when you think about that social phenomenon, how important is good regulation in maintaining or even building public trust?
It's a great question, and I think it's becoming increasingly topical, although I think the causes of the deterioration in trust in the past are now shifting into different causes of deterioration in trust because of the environment that we are now operating in and the role of access to information, the global issue of misinformation and disinformation. And I mean, at its heart, obviously, every institution has to take accountability for its role in society and doing the right thing to ensure that financial services is a trusted and respected, foundational part of every nation and every economy. So, leaving that aside, I think, the role of regulation now, of course, we have to be starting to think about some of the higher order 21st century issues that we've got. And data, one of the things that we've been really worried about in the past, and some of the reasons why trust has been eroded, we only have to look across to Australia to be, very aware of some of the horrific data breach, data loss issues that we've had that's really undermined confidence in financial services. But there's actually a bigger new worry, which for consumers is, well, what are we collecting in terms of data? What are we doing with that data? Did we need it in the first place? And then are we using it in a way that we intended for? So actually even institutions' own data strategies now has to rapidly change. And there's a massive role, I think, for regulation to play in that, particularly as well in New Zealand, because we've got Māori data sovereignty issues and concerns, and I'm not sure we are where we need to be as an industry in that regard. But of course, we're on a race. There's a massive mega trend for hyper personalization. All institutions are on a race to get data, use it for a different purpose. Have we actually asked consumers about whether they're happy with that, whether they're comfortable with that? And I think that's one of those areas, I think, where institutions and regulators can actually contemplate those higher order issues together and think about, well, how might we lean into that, enable that data utilization for good, and meet the needs of consumers and the industry at the same time.
And so how might you lean into it, in your view?
Look, I think we, again, that comes back a little bit to what we talked about earlier this morning about we're still grappling with, and particularly in this market, we're a nation of small islands at the bottom of the world. We haven't always had the access to the necessary, capital and investment to ensure that our systems and our platforms are absolutely fighting fit from a modern perspective. And that has been, to Sam's point earlier, a little bit of our issue in relation to the reason why we've needed to step into remediation in such a way that we have in this market. Data and systems have let us down, and we have to take accountability for that. Going forward, though, I think, being able to prioritize those issues in our strategies, prioritize our investments, and making sure we actually just get the basics right before we go leaning into fast tracking new innovation to sort of cut through in the market and be competitive in the market. There is still a place for us to ensure, first and foremost, that we've got the basics right.
Samantha, how do you think about that trust component?
Really, it's really important, and there are very real challenges. We've been, I was talking about the issues of New Zealanders being promised things by their financial services providers that have not been delivered in practice. There are 4 things that New Zealanders need from their financial services, and they need to have confidence in. 1, bank accounts. The second, that they can invest for the future. The third, that they can borrow to smooth out their lifetime earnings. And the third is that they can ensure they have access to trusted products so that they can insure against the risks that they do not feel able to manage. Those are 4 things, and they need great advice to get all of that to work. And and it has become harder. There have been some real challenges to that trust. I'll start with the point we've just been talking about. One of the things I noticed when I returned to New Zealand from 28 years in the UK and Europe was the underinvestments in systems that had been taking place in some of the important institutions in New Zealand. So that really basic things such as multi-product discounts that had been promised to New Zealanders were not actually delivered in practice. That doesn't help trust. The other area that is taking an increasing amount of all of our time working together is in scams. The technology is it's a continual race with deep fakes, the use of AI, the use of crypto to sort of funnel away money. It means that we're working in an environment where we cannot trust the information that comes through to us. We're constantly saying, is this nice Jack Tame who is trying to sell me this investment product, or is it a deep fake? And so
The Cockney accent should give it away, Samantha.
I don't know. I don't know. We'll give it a go. But these are sort of really challenging issues, and we need to work together. Government, regulators, industry, consumer organisations. We all need to work together to be across that to build trust. Because I don't think we've still got a lot of work to do.
How do you think about the trust component, Gráinne?
Well, I don't think I can add anything of value, so I'll pass to you.
Wonderful. I was waiting for a good one. Look, I think we're going to get to the root cause of the problem. What is creating the mistrust? And I think at the heart of it, insurers sometimes can be sneaky and banks can be greedy. I think asset managers just right in the middle. I'm not sure about journalists. I don't know where you sit on that continuum, but I think it gets back to how do we build that confidence, and how do we be transparent and clear in it? And if I do take KiwiSaver for a second, I do think the regulation and the focus on a high cadence of information and sharing that information and sharing the returns and sharing the fees and the work that's been done around the defaults, etc., is now building a level of trust that is good and is supporting, a savings habits. And so I think it comes back to a level of transparency, a level of simplicity. If you receive a 35-page insurance policy doc, that doesn't build trust because no one can understand it. Even someone like me who's been in the industry a long time. And so we just, we started off with quotes. If you quote, Winston Churchill, apologies for the long letter, I didn't have enough time to write a shorter one. We've got to be better at writing and conveying information in such a way that people can understand it. They then feel confident, trust in the provider, and then we can get to the heart of the outcomes, which is what we want, which is good savings and good protection.
So that transparency component is absolutely vital. Are there examples you can think of good or bad regulation that have supported or harmed savings habits within the KiwiSaver context?
I'm not harmed. Harmed is when it becomes not bipartisan and gets kicked around and the rules change. And I think that was the point earlier, is if you want a really good outcome and you want a good game, sports game, you need to have consistent rules and clarity of the rules. If we keep changing the rules, and making them complex, then people don't understand and they lose trust. I think a good example is, if I think look back to it, Samantha, is the FAP licensing. And whilst it was it was uncomfortable at first because we were starting to learn how to do advice. I think we got ourselves into a position where actually it was so hard to not give advice. You realized, actually, damn it all, I'm going to give advice and I'm going to put guidelines and sort of rules around it. And ultimately, that's what a lot of our consumers and clients and customers actually want. They do want support. We just need to set the right guidelines so that you don't feel that if you don't get it perfectly right, you're slammed with an enforcement notice. But there's room to grow within those sort of regulations. And I think that's another good example.
Is there anything, any sort of opportunity that you could see for a sandbox type approach within your sector?
Sandbox. If the answer is more innovation, if the answer is innovation or more competition, we have 38 KiwiSaver providers, for example, over 300 funds. We're not struggling with the choice situation you might find in supermarkets. So I think we've got to get down to the heart of, again, is what are we looking to try and solve for in the sandbox? Sandbox's tokenization is excellent when you've got new technology. You sort of haven't quite worked out what it is yet. And so then how do you regulate something that you're not quite sure about? And so I think in things like robo-advice, which I gave examples of previously in the UK and Asia, I think that worked really, really well. As the industry matured, we then built guidelines that supported it and also protected consumer. I think in the case of KiwiSaver, we're probably through that now. We're out the other side. I think we now need to understand how do we help people actually get better savers, because we are not a good nation of savers, and we have an aging retirement problem downstream. So I'm not sure if the sandbox would be good for us, but I think tokenization is a really good example. Fractional investments is another one where you could put it into a nice sandbox. You can see how it plays out. You can then match the regulation to the outcome and the technology as it emerges.
So Gráinne, I think the ministry has been up and running for about 18 months or so now, about 18 months. What stands out to you as the themes or specific things that you are seeing with good and bad outcomes for consumers?
So I think whilst there is a little bit of a theme that's being talked about here in terms of, regulation and maybe too much regulation in New Zealand, what we do tend to find is that consumers approach us sometimes wanting deregulation, but also wanting regulation and wanting more regulation. We have a tip line. We've had over 1,200 submissions to that tip line. What's been fascinating there, 70% of those people have never actually approached government or the agency about the issue that they have. So we're delighted that we're opening up that engagement with the public. Yeah, just for this audience, you might be interested to know that there's actually very little complaint has been directed to us about this particular kind of field. So we would say probably only about 6 of those 1,200. We do get a little bit more about the complexities of AML, and we have had a little bit about some of the actually, what's been interesting is normal New Zealanders about their daily life, about things like thresholds. So thresholds for probate, thresholds for management of assets if you've got an enduring power of attorney. So that's been really good to actually open up an area of conversation which is about how regulation impacts people's day-to-day life. And if you get it right, they actually get more quality time back. So we helped raise the thresholds for the enduring power of attorney, and 500,000 carers. You talk about the older population, 500,000 carers in New Zealand. If they just have to do 20 minutes less admin, 20 minutes over 500,000 is a lot of people. The other, pieces that we're seeing is there's probably too much. I would say, look, I'll put my hand up. There's too much regulation. So that's my view. There's 1,200 pieces of primary legislation. Much of that is actually out of date. And actually, there's a very limited amount of time in the legislative agenda and the House agenda for changes to legislation. So the economy for legislation is supply. Demand that cannot keep up with supply. So, for example, there were 256 legislative bids last year for 33 slots, because we live in a democracy, and that's a good thing. Actually, legislation takes time. So one of the things that we have been working with a range of people is to say, do you actually need legislation? And I think as the world changes and, data and information and things move more quickly, the old ways of working in terms of prescribing things in legislation will not allow it to be fit for purpose. So what I would like to just say to you, when you're submitting, think about, yes, you want that problem solved today, but is that problem going to exist in 5 years' time? And if you advocate for a very specific piece of legislation, it will be out of date. So we've seen that in a number of reviews we've done, importation of agriculture and horticulture products. People have wanted actual annual targets. The fact is, an annual target, the product will change in 5 years' time. So just, I think what we want to do is, yes, there is the regulation piece, but actually what are all of the other parts of the system and how can you actually affect change or create a better pathway for the future without it having to always be enshrined in primary legislation. So primary legislation 1200 then leads into secondary legislation. Just in 1 year, there are 1,300 amendments to secondary legislation, and that's just in 12 months. So just have a thought about that when you're advocating for a new piece of legislation.
That's quite extraordinary. Yeah. If it's your contention that New Zealand's already over-regulated, what sort of challenge do we face in unpicking that?
Yeah, and the unpicking is really the interesting part. So, I mean, we did a review on hairdressers and barbers, and we actually got a little bit of criticism for that, to which I very firmly said, actually, small business is the backbone of New Zealand, and actually an insight into how they work as small businesses gives us an insight into pretty much 90% of the economy. They had eight pieces of regulation that told them to do the same thing. So actually stripping those out, but a lot of those have been placed in legislation, and then you need time in the House. You need to go through a democratic process to withdraw that regulation. So again, this is where we've got to work on the stock, but we actually also have to make sure that we're working on the flow of new regulation coming in, and making sure it doesn't become a dead weight in 10 to 20 years' time.
Okay. I've got a question from the floor here. Paula, I'll put this to you. You've been driving the innovative conversation this morning. Heidi asks, an innovative environment is important, but so is an innovative, curiosity-focused mindset. How do you see those in the room, building and leading a mindset of innovation?
I think that's such a great question. And actually, we've been talking a lot about curiosity and creativity as being a sort of a fundamental part of the required DNA for institutions in the future. I think the tie to regulation here is we need to make sure that when we set up and sign up to regulation that there aren't unintended consequences. And I think if we look across, I worked through the rise and fall of the Irish market where there was a totally inadequate regulatory environment, then preceded by the GFC, and then a very solid amount of consumer protection legislation and regulation that was implemented, and the institutions in that market found it very difficult to interpret the regulation. And what happens in that environment is that your institution will always default to a more risk averse mindset. And to a certain degree, we've seen the same here happen in this part of the world as well. And if we think about those unintended consequences of regulation, we look at Australia, what has happened there in terms of some very well-intended regulation, which has actually now limited access to quality advice. I think it's costing somewhere in the region of $7,000 now in Australia to access good quality advice. And of course, that is actually the counter opposite to what the regulation would have intended, which is to ensure good quality access to advice in a way that was suitable for everybody in the market. So when that happens, and when you go through the ebbs and flows of enforcement, and we are in a high enforcement environment at the moment, so the culture that then is bred within organisations and around the boardroom, I think, is one of avoidance of any risk, and it actually can then stifle to a degree good risk taking and good innovation. And again, if we look at Australia and the drive of APRA in Australia, they've been on a risk maturity drive. They're looking for all of their tier one organisations to absolutely increase their risk maturity. And what that means is actually the organisation has to go through a cultural reset as well. And somehow they have to find that line of being able to interpret the ambiguity that sometimes comes with regulation, find a comfortable space, and this is where dialogue with the regulator is so incredibly important, but to really embrace that sort of curious, creative mindset. And I think, the way we talk about it at Chubb Life is that as long as it is good for the customer, good for the colleague, and good for the company, it will be good for the country as well. So we sort of talk about it through that mindset. And I think that's probably the next evolution of regulation and risk maturity in the New Zealand financial services landscape that's required.
Samantha, a couple of specific questions here for you. Picking up on the regulatory burden point, can you speak to us about exemption considerations for COFI and CRDs?
Yes, so we have in very recent times passed five class exemptions and 15 individual exemptions, and we currently have other class exemptions underway. It's a big part of our work. We have a statutory requirement which we take very seriously with a strong team in the FMA to keep the rules and the practice, the regulations pertaining to financial. Get that one. Oh, you can hear me again. To keep them under review, and so this is a very live approach for us. I think there's a second point, and Paula, you kind of caught it just before, which is as a regulator, we very much look to drive a culture of curiosity and substance over form. It's part of the culture that we are looking to really lean into at the FMA. It's why we have put such a big focus on looking at the outcomes rather than the rules, and really looking at how do we set our priorities. You can see that we put our priorities for this year in our financial conduct report. They're all areas that I doubt anyone in this room would disagree are areas that are timely for us to be looking into at the moment. Regulatory burden, I think there's a couple of other really important points around regulatory burden. If there is a perception around burden or around the risk that regulation brings, it can be incredibly counterproductive. Earlier this year, I talked about some of the risk-averse practices that we were seeing in organizations around the provision of advice. We were seeing that there was a pulling back completely unnecessarily from providing really quite straightforward advice to customers, and that's something that is an area that we have been looking into and working in the dialogue that we're having with firms. The second concern always, if there is, and I'm going to use AML as an example here, the anti-money laundering, countering of financing of terrorism, are actually incredibly important internationally, and to make sure that New Zealand is seen as a good world player, that we're seen as a clean place to do business. And that should be where the focus of our conversations around AML provisions should lie. Are we doing a good job of disrupting financial crime? Instead, we're having too much conversation around the nitpicky, tricky areas that are involved in AML, in the AML compliance. And this is an area that we really do need to shift.
Another question. Oh, sorry.
This is not particularly useful, but interesting all the same. We all talk about curiosity killed the cat. And what we forget is that that proverb has a second line, and that is satisfaction brings it back. And natural consumer psychology is you always remember your failings 5 times as much as your wins. And the point is we all remember the curiosity killed the cat, so don't be curious. Actually, it is the 9 lives in the second part of the proverb that's really interesting. Point of the story, if there is one, is we, as New Zealand, don't have to be the innovative regulator, but we sure as hell can be a fast follower. And I think in our case, I particularly look at KiwiSaver and the like. If we can be a really good fast follower, I think that has enormous benefit for us. We don't have to reinvent it here. We can learn from the mistakes of others and look out much, much more to bring those learnings back in the form of our propositions, but also regulation.
Yeah, that's a really good point. Dan picks up on that. Samantha, the GDPR was almost a flagship piece of legislation in the EU that put consumers in the driving seat for personal data. Would the FMA support a similar model being deployed in New Zealand?
So the policy is the policy is one that is set by the government around privacy and the way in which it is it does work and will prospectively or could prospectively work in New Zealand. Our job when we're thinking about when we're thinking about the use of customer information, the use of Māori data, is to be very encouraging of a substantive approach to delivering good, good expectation. Okay, it comes back down to what is of most important for us, which is what are New Zealanders expecting from their financial services. So it's less around, this is kind of, I always get a bit nervous when people say, oh, well, should we bring in this regulation or that regulation? Let's go back to outcomes. So COFI, for example, is a quite principles-based regime. You have to have a fair conduct program in place. It seems to me obvious that part of your fair conduct towards your customers is going to be that you look after their personal data.
Yeah.
And that you treat it with the care that they reasonably expect you to. And that's where we would focus our attention.
Yeah, right. A question for anyone who's got thoughts on this. How is AI currently intersecting with our regulatory structures at the moment? Is it at all?
I'll pick up broadly. AI is, our regulation in New Zealand, and this is really helpful for innovation, is on the whole in the financial services sector, a lot more principles-based, outcomes-focused, higher level than we see in other jurisdictions. I can't comment, Gráinne, about any of the other areas of regulation in New Zealand. I enjoy being able to have a cup of tea now at the hairdressers rather than being told that I'm not allowed to have a cup of tea. So I think that I think that with that approach and looking at technology, it is in New Zealand we do have the advantage of it being quite technology neutral. That means again that we can focus our attention not on creating more regulations or amending regulations to deal with new technology. We can actually go immediately to, as I set out in my speech, working with the industry, working with innovators to understand how they can use it to safely enhance the experience of New Zealanders of financial services.
Yeah. Gráinne, how would you say does regulator capacity and capability in New Zealand compare with similar regulatory expectations in other territories?
So I would say that, I mean, we do have that thin market. So we do see quite a lot of competition for the really capable people. I would also say we have too much fragmentation in our regulators. So in a number of sectors, we have, quite a few regulators, which I think doesn't play as well. It would play better in a larger market. Again, I just think we've got a bell curve. I think we've got some fantastic, and then we've got some, that are less good. I think as well in New Zealand we do have a mindset, and I mean I even see this if you look at the dispute kind of resolution landscape. Every time there's a crisis, every time there's a problem, there's another organization that's set up. Even if we look, I mean, there's been a lot of talk in the public sector around, a number of agencies, but we tend to respond by acting, without actually integrating or looking to see what we've done. So I would say we probably have a far too fragmented landscape in New Zealand compared to other international jurisdictions, and at some point there would probably be benefit in having a level of thoughtful and considered consolidation about actually what is the problems, why do those organizations exist, and how do we best serve New Zealanders in the most cost-effective, productive, efficient, and safe way.
Samantha, a question here picking up on your KiwiSaver report. It identified a growing gap between contributors and non-contributors. I suppose that makes sense. Do you have any views on what should be done?
So I'll start with KiwiSaver it's 18 years old, so 18th birthday. In practice, we're really only it's a long-term saving. So we will really only see as it matures into 40, 50 years, of age will begin to see how it has weathered the ups and downs of the economy. So in some respects, what we are seeing which doesn't mean that I don't think it's worrying, in the level of in the drop in contributing members is reflective of the hard economic times that we were in. And KiwiSaver was designed to be able to support New Zealanders through the long-term savings. What I think that 30% level is really high. I think we need to work together to make sure that that messaging is and support is provided to those who aren't contributing, to look to, can they start to, and how quickly can they start to be putting savings back into the scheme again. And I'll get back to a point I made in a speech. It is one of the requirements. It's a requirement for default KiwiSaver providers. I would encourage all KiwiSaver providers to do it, which is to keep in close contact with their non-contributing members to see whether they can just start to put in a little bit more.
That's a very good point. I have a KiwiSaver savings holiday, and before you gasp, it's because I have two schemes. So I have a separate scheme that has a greater incentive than a KiwiSaver scheme would have. So I do some contributions to my KiwiSaver, but I have a separate scheme as well. But it's an incredibly low barrier. Like just to go in and say I want to take a savings holiday. It's like, yeah, all sweet as, bro. See you this time next year. And I receive very little from my KiwiSaver provider about, hey, maybe you actually want to talk to us a bit more about contributions. Is a very good point.
Completely agree.
Yeah, Blair, do you have thoughts on that?
You should come and talk to us. Yeah, look, two thoughts. We have 3+ million people who are enrolled in KiwiSaver, and I have an 18-year-old son, and I know the mistakes he makes. So we just got to realise the maturity of that scheme. So I think we take the positives. The positives are that we have 89% of our workforce now with a KiwiSaver. That is very, very good. We have and continue to evolve how we're making that money work hard for people, and in terms of sharing that information around the transparency. And I think that's really, really good. Not just letting people default into a sort of a low risk return scheme when they have 30 or 40 years to retire, and actually supporting them to have higher risk and return opportunity, I think is really, really good. But it comes back to the sort of the wicked problem we're solving for. And that is, we are not a nation of savers. We really aren't. And just to put some sort of figures around that, we think we save around 3, 4, 5%. Actually, according to the RBNZ in their report in 2023, we were dissavers in 2023 of around about -3%. And if we take a curious, broader look out, our good friends across the ditch with their very, very complex scheme, but they did start earlier, are around about 11 or 12% savings ratio. We look further out, Sweden and the Netherlands and the like, in Denmark are about 17%, and Singapore are just a wonderful nation of savers, about 20%. Now, ironically, I'm off piece here, so go with me for a second. But if you went to the Minters Symposium on Growth the other day, if you went to that, and this talks to the other wicked problem we have as a country, which is around productivity, there's a massive strong correlation between the countries at the top of the productivity, which is Denmark, Netherlands, Scandinavian countries, Singapore and the like, and those at the bottom. And I think if you listen to Sir Ian Taylor, he highlighted we were 37 out of 37 on the productivity curve. And that's where we are on savings as well. And I think we just need to have a hard look at the root cause of why we're not a good savings nation. And we need to talk about it. Almost half of us struggle to talk about money, so it's a cultural problem. And we have been told as we grow up, the holy grail is own your house, own your house, own your house. And I think it's not mutually exclusive. You need to have a home, and that's really important. At the same time, we need to learn the art of diversification, and that we can walk and chew gum at the same time. And so we can do 2 or 3 things at the same time. And so if we talk about it, we put a plan on it, and we make sure that our schemes, our KiwiSaver schemes and the like, are competitive and innovative, then we have a recipe for better success. My nervousness is KiwiSaver becomes the panacea for everything, whether it's retirement savings or first home buyers and housing affordability. And evidently infrastructure as well, and everything else in between. If we start kicking it around with a bipartisan or not bipartisan approach, we will go back to the real problems of regulation, which is when you change the rules, you change the game, you change the outcome. And that is not something that any of us want.
Yeah. Very good message. I'm going to
We
finish.
need to change the KiwiSaver product.
I'll finish with one final question for each of you. What is the one thing the financial services sector can do so that regulation is embraced rather than resisted? Paula, you can kick us off.
Oh, look, I think we're a small nation, and business is a relationship industry. I think sometimes we just need to be a little bit more pragmatic about all getting in a room and just having some really good conversations face to face, rather than thinking that we need representative, although we are in an FSC conference, representative bodies or lobbyists or anyone else in the middle. I think we can actually solve a lot of problems together by just being pragmatic.
Samantha.
Get the conversations in the boardroom about delivering the outcomes, the high-level outcomes from regulation and out of your compliance and legal departments.
Very good. Gráinne.
I think be really clear what is the problem, and actually what is the problem in New Zealand, and then what is the counterfactual, because actually the counterfactual in New Zealand is very often not the counterfactual in other markets, and we get confused. So really keep in touch with the reality and what are the genuine alternatives.
Yeah, two quick thoughts. You know, we are a small nation, but we're a bloody good small nation. And nations like Ireland and the Netherlands and Singapore, who have very similar populations to us, are outperformers. And if I do look at how we're sort of positioned, we have one of the highest rates of insurance penetration of any OECD country. We know the value of our homes and we insure it because that's what we're sort of nurtured on as we grow up. We can absolutely be a nation of savers. But the first 2 or 3 steps we need to take is don't play with the rules too much. Get some consistency so that we understand how we can evolve within those guidelines that the regulation is set up. And they are not the handbrake today, that's for sure. I think the second one is get out and have a chat about it. We need to be much, much more comfortable about talking about money with our children and as a society. You know, it's just that side of it is not working in our favor. And I think if there's a third one, let's get comfortable with technology. You know, I came back and I heard from my 3 teenage boys, and one of them came back the other day and said, you know, I won't mention what school it was, but anyway, it was a good school. But they always sort of said to me, I wonder why I'm paying fees at times, but they just sort of said, you know, AI is cheating. It is not bloody cheating. It is not cheating, but you need to know how to use it and be comfortable with it and when it can work against you. And I think that is at the heart of good regulation, is providing those handrails. But, you know, as a room, we are responsible for the outcomes in this room. We are managing these businesses, and that's a big responsibility for all of us. But I'm absolutely adamant we can take the good things that we do at the moment and we can absolutely build on them.
Fantastic, guys. Those are such good messages. Thank you. I think, I don't know if we achieved the sexy goal, but sexy adjacent will suffice for now. Vanya is going to have a quick word to us before we all break for lunch, but please join me in thanking our panellists, Paula, Samantha, Gráinne and Blair.